following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. Don't make assumptions. Let your life be transformed. When you stop making assumptions, your word becomes impeccable, and your life is completely transformed. Magic just happens in your life. What you need comes to you easily because you let the Spirit freely move through you. Market-wise, let's take a look at it out here. We have the Dow Industrials down 70, NASDAQ off 32, S&P's down 7.5, gold contract down $12, trading at $13.26.30 an ounce. Silver down 54 cents, $16.62 an ounce. Light sweet crude up 40 cents, $68.80 a barrel. Notes and bonds, 10-year note down 6 ticks, 119.11. 30-year bond off 3, 143 flat. King dollar broke topside, up 625 ticks, 90.700. The euro is at 122.06 to 1 US dollar. The yen is at 107.60, 108.65 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We get lots of earnings this week, folks. Bottom line, you get the SPY right now, down 56 cents. You're 43 million shares traded. Bottom line, it's going to need a lot more than that to break down. You're going into 265.11 that had 179 million. That's where we went downtown. But bottom line, guess what? When you go up or down, what ends up happening is this is where, when we had volume on the way down, the top of that bar is going to basically stabilize this baby, and has stabilized it out here today. So with the way this is market trading right now, I suspect this thing is still going to pop coming into the end of this week, window dressing, all of the above. That's your SPY. We take a look at the NDX 100, same type of setup in the NDX. NDX, you know, what we did do on Friday, you know, we had an expansion of volume on Friday. So the larger picture is saying that the February 9th lows still want to get hit. The smaller picture, meaning that the next 3, 4, 5 days, window dressing, earnings coming out, this thing looks like it wants to pop again. We had an expansion of volume on Friday, did 49 million shares as the Qs went lower. Today, you're doing 24 million. Bottom line, that still says it wants higher price. Gold contract, what do we have with gold? Gold contract out here trading at the lower end of the consolidation that has been trading in. We are contracting in volume right now. We've done 271,000 contracts. This baby is coming into big contracts. You're coming into 374. So you're 100,000 shot at this 1322 area. We hit 1323.80 today. Silver, let's go take a look at silver. Silver broke topside last week, had price spread, had volume, had all of the above, had follow through. They take silver south 3% today, and you have 132,000 contracts. I think we were doing 170. 1 second. Yeah, we were doing 170. Bottom line is they're not holding price. You know, so this baby sets up. What, 1651 is game here. The lower end of this consolidation is down at 1621. You know, we'll see what ends up happening at this 1660 to 1650 area, because it does have some support at that particular area. Notes and bonds, bottom line, the 10-year note still looking over the cliff. You know, bottom line, it didn't, well, it's over the cliff, but it didn't do the nosedive over the cliff. And what I mean specifically is that you don't have the wide price spread, you don't have the volume behind the move. Right now we've done 1.3 million contracts. That's light contract volume for breaking down. You're basically going into 2.2, 2.3 million contracts, but thus far the price has not held. Whereas the 30-year price got rejected. You do have lighter volume. 30-year wants basically higher price. We take a look at the yield structure out here. What we have with the yields right now is that the 10-year hit 2.975 out here today. Let me just see what this 2-year. So 973 is the number. Yeah, so you still get 50 basis points between your 2 and your 10. So that curve widened out a bit. The 30 right now is at 3.143. So they are reducing the 30. King dollar, yeah, king dollar. Oh, we forget king dollar. So king dollar finally broke topside. Been trying to do this for 3 months right now. The consolidation in king dollar started in January 15th. You're breaking the swing point, the swing high of March 1st. You do have volume behind the move. You got price behind the move, price spread. We did have price pushing into the swing point on Friday. Friday we did 31,000 contracts. You get 29,000 now. That's saying that good old king dollar. The next leg up is somewhere between 91,200 and 92. That's how that leg straightens out. Let's go back over to the TLT, the 20-plus bond fund. This baby also now is basically look like it's going to reject lower price. So the notes and bonds are going to be really crucial as to where the metal market is going out here. We take a look at some of the higher volume stocks out here. This is what you have. We have Micron Tech down $1.35. You get Box up $2.28. Chicago Bridge is off $1.73. You get Intel down 40 cents. We get Merck up $1.38. Alcoa is down $8.35. The aluminum market got smoked, toasted, roasted, all of the above. Bottom line is that it looks like the aluminum market is going to open up for Rossel, which is the Russian company that controls 6% of all the aluminum in the world. Bottom line, that aluminum, Alcoa had gone from $44 last 2 weeks up to $62. Mnuchin came out and said, well, listen, if you get rid of the CEO, we might be able to talk. Bottom line is that they're just playing games, because guess what? Yeah, you can get rid of the CEO. Well, they want the controlling the shareholder. Guess what? The controlling shareholder in all these companies, folks, is Putin and company. So bottom line, yeah, they'll play, they'll change. They'll do another, you know, basically company with the structure. Big deal. Does it make any difference? Well, evidently it does when you're playing games like this. 877-927-6648. Dow Industrial's down 66. NASDAQ off 31. S&P's up 7.5. We're going to be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 66. NASDAQ off 32. S&P's off 7.5. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the first hour. Don't forget, folks, Steve has a great show here every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, Mastering Probability. You can come over to our website at TFNN. Take a 30-day money-back guarantee. The way you do that, you go to newsletters. You go to trading newsletters. You see Mastering Probability. Test it out right there. Steve Rhodes, what's going on?
Well, I was just telling folks in the den, I was just checking my email, on a private email that I set up about a week ago. It just shows you how quickly your stuff can be compromised. I get this, the old email where I've just made $47.9 million if I just give this banker in Ghana my bank account information.
Totally. It's, you know the sad thing is that they send so many out, folks, they get takers. It's just,
they do, yeah. But
yeah.
I set this up because I just wanted to, personal and private emails, I wanted to get rid of all the junk, not used for anything else, and already. I can't understand how it gets junked up so far. But anyways, that being said, you know what's interesting, and I always like to put together some charts and things like that for us to look at. But you were talking about the 30-year Treasury, and you're kind of like the bond. We can't use bond king because that would have been
Bill Gross, yeah.
Bill Gross, right?
Right.
But kind of the bond bullish guy at this stage. And it's really interesting because the charts that are on my screen right now, this is why I bring it up. I know we've got one of our tigresses that took a long trade in the T-bonds by TLT, I believe it was. And what's interesting is, one of the great tools that we have access to are our TAS market profiles. And today, or last night, I should say, is a brand new box formed out here. And the box itself, folks, if you watch us on Tiger TV, you'll see 3 different colored lines. The green line is the bottom of a box. The blue line or cyan color is the center, and the red line is the top of the box. And price has been testing the 142 1932nd area for a good portion of the day. And this box here, because the center line is closer to the bottom, I consider this to be a bullish structured box, which means that if all your friends get hold of this, they can easily push price up into the a big move up into the 146 area. And what's kind of interesting here, because patterns just simply repeat and repeat over again. And if I take a look at a 2-hour time frame chart out here, this one of my tools that I shared with subscribers during the workshops, during the radio show. And this is the 2-hour chart out here. And there's two patterns that just happen to show up as we speak right now at the low of today. And that is, we can just simply see that price has been pushing lower, doing it with less relative energy out here. We get a nice little bull sash candle and some follow through above what I like to call Stevie's red line. So this says that there should be some more bounce in place. And if we take a portion of the Chapman wave out here, it's not the Chapman wave pattern, but if we take a portion of it, I like how the market moves in these 7 waves, kind of like you go to a baseball game and 7th inning stretch, you get up and you do something a little different out here. And that's represented by letter G on my screen. So there are 2 patterns on a 2-hour chart, and you have to stay inside this time frame that also show a short-term bottom. So, just patterns simply repeat over and over and over again. And if we take a look at the 2-hour time frame chart now and look at its TAS market profiles, the idea is if you can close above resistance, which in this case here was 142 and 25, 30 seconds out there.
Yeah.
Price has closed above that, so it is supporting, moving higher. And I know you had mentioned that this is going to be helpful to you in your analysis when you take a look at gold or dollar.
Sure. Both. Yeah. Right.
Yeah. So kind of interesting the pattern that has formed out here, as we speak right now. And as far as patterns that continue to repeat, this chart here is a picture of the Dow. Now, this is a monthly time frame chart that you and I are looking at. And what's really interesting to me, this takes us back into the 1997 time frame. And what folks will see, first they'll see 2 red arrows, a monthly chart. But the high that was made in January of 2000 is listed with the red arrow there. And so far, our high this year is January of 2018. If we take a look at these boxes, either squares or rectangles, depending on which area of the chart we're looking at out here, they are the exact same price consolidation level. Or pricing consolidation. So, for example, back in the we can go back to 1998 in through about 2002, and there was this large, about 3,000. It's within 100 points of each other, around 3,200, 3,100, right around there. In 2015, we had that same type of consolidation, and that's where we're at right now. And until price breaks above or below that, price can remain inside this sideways consolidation. Doesn't tell us for how long, but we've actually seen this pattern, or this. Now, back in 2000, that was the bear market. It was a bear market, that type of price move. At this stage of the game, it's just a normal correction that we've had from the high. And as far as patterns that repeat and where we're at, we have the benefit of taking a look at the Dow, again, a monthly chart, and looking at its horizontal trading ranges. Now, subscribers to my newsletter service, they immediately get access to a workshop that I've done on horizontal trading ranges. They get access to the workshop that I did a couple of weeks ago, which showed the pattern and the exact formula for the pattern that's been present before every bear market in the Dow for the last 130 years. And it's really important to understand that pattern. This here, with regard to the horizontal trading ranges, suggests to us right now that the range that we're trading in, so we've got the consolidation we just looked at,
yes.
But we've got a more narrow range, so to speak, which is between 23,934 and 25,615. So support has held at this stage. I know you were mentioning maybe a bounce that to the upside still, window dressing, things of that sort. I don't know that price will get to the 25,614 level, but it wouldn't surprise me because, as you like to say, if you can't bust them down, you try to bust them to the upside, and that's what these horizontal trading ranges show us. The price pattern that's really key for being able to identify where we see significant moves to the upside or the downside is when price moves higher and does it with less relative energy, or moves lower with less, or moves higher with less relative strength and lower with less relative energy, just as it did at the high in 2000. So we took a look at the January high versus the bottom that formed out here in the 2003 time frame. And if we take a look at where we are at right now, and this was a live snapshot chart of this weekly chart as of about an hour ago or so, we can see we do not have that pattern in play. So I don't believe that what we have here is it's a top and it's a consolidation that could last for a while, but not the major top and not the pattern that's associated with the major top. Now, what if I'm wrong, right? What if this time is different out here? Well, then price could actually fall down to this diagonal green line, which this is a logarithmic chart that we're looking at. On the logarithmic scale, it's a nonlinear scale, and it's used when there's large ranges of data. Well, my Dow data goes back into the 1890s, so it's a large range of data. Now this is just carried forward. This logarithmic line out here would say if we were going to get some type of market crash, 18,400 would be my price target. But I don't believe that that's where we're at right now. More likely, at some point in time, we're going to see price break out of the consolidation, make a new high, and then that's where things could really start to get hairy. So those are my thoughts as we speak right now.
Come on over to our website at TFNN, folks. Go into newsletters, go into trading newsletters. You see Mastering Probability, 30-day money-back guarantee. And, of course, don't forget, every trading day, 1 to 2 Eastern Standard Time. And don't forget, with the Marketing Probability, bottom line, you're going to get all of Steve's course out there. Steve, thanks so much, man. Look forward to the show tomorrow.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now up 45, down 45. NASDAQ down 24. S&P's off 5. Let's go over to Sears, SHLD. So Sears out here today, folks. You're trading up 19 cents. You're at $3.20. And if we first, let's do this, go this way first, because this has been quite a saga, a 13-year saga with Eddie Lambert and Sears. Sears gross revenue in 2014 was $36 billion. Gross revenue 2018, $16 billion. They expect gross 2017, $22 billion. 2018, they expect $16 billion, and 2019 at $12 billion. This thing, folks, is toast extraordinaire. Now, what has happened out here, the reason this thing got a little pop out here this morning, let's walk through this, because this is going to be quite a story in the context of how you basically take a company apart, but yet Lambert, when all's said and done, he's going to own all the real estate. So what this article is about, few people on Wall Street believe in Eddie Lambert like Eddie Lambert. 13 years ago, after merging Sears, one of America's most iconic retailers, with a budget chain Kmart, the hedge fund billionaire is moving again to salvage what he can. His latest plan, announced Monday, would have his ESL investments by Kenmore, Sears' well-known appliance brand, as well as several other businesses. In other words, Lambert, also the chief executive officer of Sears Holding Corporation, wants to sell what is Sears' last jewel to his own hedge fund, at least if other bidders don't emerge. The news gave Sears a long-suffering stock bump, but for Lambert and his investors, it masks the harsh reality. The department store chain confronts a wall of debt and pension obligations that would be difficult to surmount, even if the businesses weren't as bad as it is, and business, by all accounts, has been very bad. So what do you hear these numbers? These numbers are a monster, folks. So the numbers tell the story. $1 billion of Sears debt is going to come due within 12 months, according to the company's latest results. It has promised pensions. They're going to burn the pension, people. This will end up being taken care of by you and me and the government. It owes pensions for 100,000 retirees, but the plan is underfunded by $1.47 billion as of February 28th. Their bonds are trading under 50 cents a dollar. So what this person is saying, this is a slow motion liquidation that has gone on for several years, trying to extract cash out of it. This is where the kicker is, folks. Let me go on a little bit more. Monday's plan was Lambert's latest attempt to put off what analysts warn will be the inevitable bankruptcy for the 125-year-old company, whose dream book catalog was once a fixture in all our houses. Lambert had previously called for going to an asset-light operation. He wants to manage a retailer with fewer stores and a robust online business. In addition to Lambert's offloaded real estate and other units, including Lands' End Clothing, Craftsman, tool brand, Sears Canada had suffered similar losses and shrinking revenue, and potentially spun off the chain, filed for protection under the creditors in the Canada court last year. At the end of the last quarter, Sears had $182 million in cash and equivalent, down from $286. Now, remember, at the beginning of the story, they had $182 million in cash. Well, they have to pay back $1 billion in cash within 12 months, and then on top of that, their underfunded liability is $1.47 billion. So you can see it doesn't take too much to figure out that, hey, guess what? They don't have any money. My take on this is how this is all going to shake out. It's going to be a total liquidation. Don't buy this stock, whatever you do. This thing's going south. But what will happen is that Lambert somehow, at the end of this deal, ends up with all the real estate. More than likely, that's the amount of bread that was going back and forth. I suspect at some point there'll be a story that, guess what? And all said and done, he probably ended up making money. Tough 13 years or 15 years, whatever that is. After close out here, we got Google coming out with numbers. We got, let's see, TD Ameritrade is coming out with numbers. Now watch this. This is going to be really interesting with TD Ameritrade. If I pull up AMTD. Okay, so TD Ameritrade is trading $60.76. They'll come out tomorrow morning. Tomorrow morning it's at 7:30 in the morning. But look at this, folks. I want to show you something here. This is when I was pulling these up earlier today, this is really unusual. And what it is, if we go look at, I was looking at the largest ownership in some of these equities, and what popped up inside TD Ameritrade, right, was, where do you see this? This is like bizarre, actually. So today's they just filed this. Okay, so today's the 23rd of April. Last night, Goldman filed that they turned around and they bought 7.3 million shares realistically last week. So it's like, that's pretty wild. They had 1.2 million shares. They bought 7.3 million, and bottom line, they're buying it 2 days before the earnings. So I can't wait to see how this whole thing shakes out, man, because you don't see that too often. You just don't see it. That is one large wager that those numbers are going to be not only good, it looks like they'd be great. So we'll see where that shakes out. Google, let's go over to Google for a second and take a look at Google, where Google is out here. So Google right now is trading down $4. You're at 1,068. Let's put this on a monthly. So on a monthly, you get a high with light volume, you're off the high with volume. Yeah, listen, this is going to be cool watching this just shake out. Well, let's see. You come off the high with volume, you test 9.9 million versus 11 million. You come off there again with 11. You get a low with 11. This is saying that your probability is higher that it's going to go for the bottom of this range than the top. So this is going to be a big number. It's particularly going to be a big number for the NDX 100. You know, and that being said, you know, what is also going on here is that this NDX looks like it wants to pop. But guess what? After the close, more than likely this could hit 160.23, and we're at 160.170 first. And we'll see how the rest of the week shakes out. But we do have a lot of numbers coming out this week. You get Amazon. So we get Google after the close. Amazon's Wednesday after the close. Good numbers coming out. Stay right there, folks. We're coming right back. We have the Dow Industrials down 50, NASDAQ off 26, S&P's down 6.5. Coming right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 61. Nasdaq's off 7. S&Ps are off. Nasdaq down 29. S&P's down 7. Let's go take a look at the indice volume out here, folks. So we are at 427 inside the NYSE. That's going to be light volume on the way down. Inside the composite, you're at 1.3. That's going to be the same type of light volume. So it'll do about 1.8. No big deal. We go take a look at the GDX. We go inside that gold market. The physical metals getting hit. Bottom line is that the equities are saying, guess what? You get a pullback on light volume. The GDX, when it had taken off the last time, the last low it made, March 20th, was at 21 bucks, 16 cents. Goes up to 23.30. You're pulling back into its strength, and you're pulling back today with 23 million versus 73. So it's going to need a lot more than that to break down. I suspect what we will get is that coming into the close, you're going to get some shares, as we do each and every close inside the GDX, meaning the shares, basically, those are the highest numbers coming into the close. But when you have short volume, as we do today, then what ends up happening, which is pushed into the close, is not a huge amount. Maybe we get 7 million pushed into the close. We're at 23. That'd be 23 still going against 70. XAU, same setup. XAU, the strength, we're down $1.83. We're at 83.29. Bottom line is that this can come all the way down to 82.54, and that's where we busted topside with volume. Gold Bugs Index, same type of setup inside the Gold Bugs Index. Gold Bugs Index right now is down 410. That is coming right into the strength from the 11th. Which is that 179 area. What's going to be intriguing out here is just watching, you know, this whole deal about the good old U.S. dollar and this bond market. So the 30-year, bottom line, is rejected lower price. 10 hasn't done that yet, and King Dollar has gone topside. King Dollar looks like it's going to take the next leg up. If we go take a look at a couple of the strong gold equities, you get Royal Gold. That's backing down $1.58. That's right up near its highs, actually. You're backing into 596,000. You've done 354. It's not bad. Now we'll take a look at Franco-Nevada. That's another royalty company that has been weak. This is a decent setup. We had come down with 567,000. You're only at 310 right now. And if we go take a look at Rango Resources, which used to be the strongest gold equity out there for years, this has been having a tough time. This is down $1. You're coming into, now this is a classic, man. You're coming into 995,000 shares, and you've only done 233. So that is a decent indication in that aspect. Where the danger comes inside the, I would say, the metals market and inside this gold move as well as the dollar, is there going to be a delayed action and reaction on this deal? We've seen these before, meaning that, you know, you get the 10-year below it, no big deal. In fact, when we were talking, one of our traders this morning was calling about the 10-year. Now, what does happen is this. If you take the 10-year and we put this on a continuous contract, you are talking about some huge amount of support where this is actually going into now. And what it is this. So when we bring this back, what you're going to see is that, you know, you have we're at 119.11. Well, we traded, bottom line, this is a quarterly. We traded like 1 year, 2 years, 3 years. We traded almost 3 years at the level of like a 118, 117, 119. That's going to be very hard to break this down from this level. You know, bottom line, it can break down, but that is what's holding the 10-year at these levels right now. And it's pretty amazing, actually, that with the move last week and even today with the U.S. dollar, that we haven't hit that 3% number yet. And not the 3% is a huge number, but psychologically, it certainly is, because, well, here, let me see how far I got to go back. I got a feeling I can go back as, well, it'd take me longer to go back years, but the bottom line is that it seems that it's very tough to get into that 3% right now. We're right next to it. That's the bottom line. So we'll see whether it's going to make it or break it. We go take a look at the E-minis again coming into the close out here. E-minis right now, they just got a little pop-up where we were down as low as 26.57. Now we're 26.68. This just popped. It's trying to pop back inside where we went downtown at 2 o'clock this afternoon. It didn't break the lower range. Well, let's see. Yeah, we did break the lower range from Friday. You know, this is an indication. Bottom line is that you're going to get some kind of a pop out here. Let's go back to Google for a second, because Google will move this market, move the NDX 100 after the close. Yeah, and Google thus far is still saying that this thing looks like it's going to pop lower. You know, what Google had done, you had a high hit, low volume high. You came off the high with volume. You tested the high again with lighter volume. Came back down again with volume. What Google hasn't done yet, actually it has done. Interesting. 1 second. Yeah, Google has tested the high volume low from the February 9th time frame, but yet when it tested it, still tested it with volume, not more volume. We did 11.8 million versus 15.9, but then we came topside. You went topside with 8.4 versus 11.6 versus 15.9. When you set it up like that, it's like, okay, man, it's coming at you again, right down to that 980 deal. I believe that the option market is looking for a 4.5% move. So that would be basically almost $45 up or down. That's what the option pricing is pricing in with Google's numbers coming out. And of course, Google numbers come out. That comes out in a split second after 4 o'clock. If you haven't test-driven yet the Nadex platform, great time to do it. Just come over our website at TFNN, hit the banner. They'll put $25,000 of paper money into your account. You can use the paper money. You can do a volatility trade inside the NDX 100, because what you do have when Google comes out so quick, the NDX 100 stays open to 4:15. So the bottom line, what a volatility trade is that you're looking just for volatility up or down, and you're looking for enough volatility that one side of that gets not only in the money, but gets enough in the money to pay for both sides of the trade. And the way that, you know, a 5% move on Google, if that's what you get, will be enough to basically get one side of that volatility trade going. If it flattens out, different ball game. 877-927-6648. Look at that little Dow. Dow's down 16 right now. Nasdaq's off 16. S&Ps are off 1.5. Stay right there, folks. We're going to be coming right back. Dow is down 14 points. Nasdaq is down 16. S&Ps are off 1.5. We'll come right back.
Larry Pesavento will be hosting a 90-minute webinar this coming Tuesday, April 24th for all Fibonacci 24/7 subscribers. Larry has teamed up with fellow trader Jim Bartoloni for this informative 90-minute workshop, taking the ABCD pattern to the next level. Throughout this 90-minute live webinar, some of the topics Larry and Bart will be discussing include the origin of the 1.618, the golden mean, the relationship between numbers and cycles, time and price, the simple math behind market moves, and much, much more. This workshop will be archived if you can't attend live, and all new subscribers get a 30-day money-back guarantee when signing up for Fibonacci 24/7, so you have nothing to risk. For all the details and to sign up for Fibonacci 24/7 today while gaining access to Larry and Bart's webinar Taking the ABCD Pattern to the Next Level, visit the front page of TFNN.com now. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is down 32. You get the Nasdaq off 22. S&Ps are off 3.5. JP Morgan, let's go over to take a look at the banks. JP Morgan out here, guess what? Can't hold price, folks. Now, this gets interesting in the aspect of we have the bond spreads getting bigger. Banks should be making more money. They come out with outstanding earnings. They did make the money. Bottom line, market sold them down. Market sold them, JP Morgan down on the 13th of April when they came out with their money, 115 to 109. Still can't handle price with the bond market basically opening that spread up. Bank of America, same setup, BAC. BAC is down 3 cents, going sideways, couldn't handle higher price. Big number. Goldman Sachs, we take a look at Goldman. Goldman Sachs down $5, 246. Now, it's intriguing about Goldman, and this is going to be a big heads up, folks. We've been watching this for years now, actually for, well, not yet, since it broke tops, yeah, over a year, January of 2017. bottom line, it looks like Goldman's going to have a shot to close under the $250 mark. That was the high of 2007. It broke out in December of 2016, got underneath it for 1 or 2 months, went topside again, all with tremendously lighter volume. Now, we break down. We close under that level. Guess what? Bottom line, that's saying that Goldman number 1 is going to take a hit down to like 172. You're at 246. But more so when you take a look at the rest of those banks and how those banks are actually trading with the aspect that bonds basically have been going lower, higher in yield, dollar broke topside. When you take a look at that, and on a fundamental basis, that yes, that they should be making a lot more money. Then you take a look at as to what's happening. Guess what? That is saying that something's coming down the pike as these banks continue to get sold off. Because you can just imagine, well, actually, Tommy brought this up this morning. This is pretty wild. Imagine the bank scratching their head. Hasbro comes out, you know, says they lost their biggest customer in Toys R Us. Stock is down, trades down to 79. Guess what? It's the 86. Just the opposite. Stay right there, folks. Google's coming out as soon as this market closes. We're going to have a lot of other numbers after the close. Dow Industrials down 19. NASDAQ off 17. S&P's off 2. Coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Got our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. You are only responsible for your half of the relationship. There are 2 halves in every relationship, but you only are responsible for your half of that relationship. It's not up to you to control the other half, respect the other half, and there's always going to be peace in that relationship. Market-wise, let's take a look at it out here. We have the Dow Industrials down 14, NASDAQ off 17, S&P's flat, gold contract down $12.10, trading at $13.26 an ounce, silver down 55 cents, $16.60 an ounce. Light sweet crude up 58 cents, $68.98 a barrel. Notes, 10-year note down 7 ticks, 119.10. 30-year bond off 5, 142.30. The 10 broke under the range it's been trading in. The 30 rejected lower price, had lighter volume, launched topside. King dollar. King dollar broke out of consolidation that it's been in for 3 months. up 630, 90.705. King dollar can get up to that 71 to 72 area. The euro's trading at 139.41 to 1 US dollar. The yen is at 108.73 to 1 US dollar. Let's get over to Google. Google came out with numbers. Google closed out here today, folks, at a price point, where is she? At a price point of 1,067. Trading 1,087 right now. It was up at 1,100. It has already given up that price point, and I suspect that's not enough for Google. We'll go through these numbers, but bottom line is that to pop to 1,100, and guess what? That is not nearly enough. We were trading at 1094 2 days ago. So let's see what Google has to say, what kind of numbers they're doing. The estimate was 24.3 billion. They did 24.9 billion. So the bottom line is that they did the they made their revenue number. Whoa, 1 second. There we go. That way. Made their revenue number. Let's see. We'll start with this one right here. Okay. So first quarter, they had a range. Their range was 820. Earnings per share, the range was 824 to 10, and it looks like they come in at 930. Paid clicks are up 55%. First quarter paid clicks. Other revenue is 4.35 billion. Cost per click was down 18%. You can see what's happening. What has been happening for a long period of time, folks, is that their clicks have been going up dramatically, but the amount of money that they get paid for it has also been going down dramatically. Bottom line is that they still make money hand over fist. Let's see. Their advertising revenue is 26.64 billion. Their free cash flow is 4.37 billion. Their capital expenditure in 90 days. So check this out. They're spending on capital expenses, meaning capitalize them over a long period of time, $7.30 billion. Big number, man. Big number. So let's see. It's 1067 is where they closed. You're at 1080 right now. They were up at this 1100. Bottom line is that looks to me that it's going to basically flatten out. If we go over to the NQs and we take a look at the NQs, what you're going to see, if you did go into the Nadex and do a volatility trade, it was pretty cool because thus far it's kind of gone both ways. What you have out here is that the NQs popped from 66.48 up to 64.93, 66.93 rather, and now you're right back down 66.73. And so what I do expect you're going to see is basically. There was a 4-point, the option move, anticipated move in Google was 4.7%, or approximately $47, folks. And we did go $33. So right now you're at 1,082. TD Ameritrade, let's look at TD Ameritrade. That closed at $61.20. That's trading at $59.93. Let's see what they have to say. So the estimate was 74 cents. They made 73, so they missed by a penny. Okay, let's see. Revenue, the estimate was 1.38 billion. They came in with 1.42, so revenue they did. Net margin interest, 1.83%. That's a decent number. Operating margin is 28%. Second quarter, look at that number of trades, 57.5 million trades. Imagine that. Wow, unreal. Second quarter, new asset clients, 22.2 billion. Average client trades per day, 943,000. Interest rate sensitive assets are 153 billion. Average commission and transactions per trade, $7.50. Average return on equity is 14.4%. Not bad. The thing that's intriguing, if you were listening on last hour, is that what you did have is that Goldman Sachs, when you take a look at the ownership aspect, came in with a big bet, that these numbers were going to be good. They filed last night that they bought They had owned 1.2 million shares. Last week they bought 7.3 million shares. Check that out. That's pretty intense. So we'll see how this shakes out tomorrow, because right now you're at 59, so that's a buck. We were basically right where you were trading, you know, last week. That's kind of where it is. So we'll see how that baby shakes out as we go throughout the trading day. Go back to Google for a second, and Google's laying there at 1,082. Now, the longer that lays there at 1,082, the more dangerous it actually gets, folks. The reason being is that Google's been on a downtrend, you know, since it reached the high of 1186 in January. Your second high, which was generated in March, was 1177. And, you know, bottom line, the high that was generated last week was 1094. Now, we did hit, I saw 1100 cross the ticker when I was on. Right now, you're at 1081. What does happen is that when you don't get the move that basically people trading Google, you're going to think $40 or $50. You don't get that move, guess what? It gets more problematic each minute that goes by. Stay right there, folks. Going to be coming back with a few more numbers. Dow finished down 14, NASDAQ down 17, S&Ps were flat.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished down 14, Nasdaq down 17, S&P's flat. If we do go back to Google, what you're going to see, folks, bottom line, dangerous, man. So Google come out with numbers, bottom line, decent numbers. I'll go over the numbers again. Google closed at 1,067, traded to 1,100. Now you're down at 1,064, 1,062, closed at 1,067. That's going to present a kind of problematic inside Google. Google, two separate times, folks, has come down with big volume. And the bottom of this consolidation is down, laying down here at 980. The numbers on Google, they come up with 31 billion revenue, and you know, if you just want to see, the growth is still there. There's no two ways about it. If we take this up, when you see this, see how this shakes out. So 2017, we're in the first quarter of 2018, their fiscal first quarter. That's how this thing works. They did a year ago. They did 20.1 billion. They did 31 billion, folks. Bottom line, it's pretty amazing, actually. The revenue, where it comes from for the year, 52. Half their revenue comes from the United States, 52 billion. 36 billion comes from emerging markets, 16 billion from Asia and other Americans, so South America, 6.1 billion. So big numbers all across, you know, the world, basically. 1,067, and okay, so Alphabet, of course, which is basically their legal name, well, that's the holding company, is relying on mobile ad sales and cost controls to drive earnings as its second wave of revenue streams develop. Cloud services, hardware, and YouTube are set to become increasingly important revenue sources. Cloud, in particular, can provide the boost. Google expanding sales staff, as well as partner channels. Increasing traffic acquisition costs remain an overhang on the near-term net sales growth. Revival of Oracle's $9 billion trial targeting Google's Android platform is unlikely to be resolved in 2018. An appeals court found that Google's use of Java API packages was not protected by fair use. Okay, so let's go on to the next. Alphabet sales may ride robust demand in first quarter, with the company reporting a 40% sales growth in paid clicks through 2017, even as rise in traffic acquisition costs have bitten the net revenues. The company expects the growth rate of these costs to moderate in the first quarter, which could add to its sales expansion. Extra compliance costs in the wake of Facebook's Cambridge Analytica scandal and Europe's general data protection regulation could pressure near-term margins. The company's cloud business can add growth upside amid an increased emphasis on partner sales channels and increased headcount. Sales growth is likely to remain sustainable amid gains in mobile search volume, increasing traffic acquisition payments to ad hosting networks. Growing cloud and hardware revenue, which requires investment, may add volatility. They're putting $7.6 billion, folks, into basically capital spending in 90 days. That's a big number. Bottom line, that's how you grow. Google sales in 2018 will keep relying on a strong showing from mobile search amid YouTube growth and momentum in cloud services and hardware. The rising revenue Google receives from mobile ads should continue to drive TAC fees it pays to the distributed partners, especially Apple, which has over 40% of the smart users in the United States. UK mobile search ads represent 47% of Alphabet's 2017 sales. Google TAC payments have accelerated in 2017 on rising mobile ad revenue. Ongoing growth in digital ads, cloud services, and e-commerce volume adds to the outlook for 2018. Google's display and programmatic business boasted by acquisitions of Ad Exchange, DoubleClick, and mobile ad platform AdMob have emerged as key drivers of revenue growth. This is reflecting an expanding Google network and revenue. Net sales are seeing a near-term headwind from declines in Google's legacy network banner ad business. Google's YouTube will likely continue leading growth in the video ad market amid efforts to bring transparency to measurement and delivery of the site ads. A wide gap in video ad viewability compared with other websites and apps may help YouTube command higher prices and maintain its dominant market share. YouTube's 95% ad viewability rate may support, yeah, that's a big deal. Okay, so may support Google's video ad sales and prices, strengthening market share. Only 66% of video ads on website and apps other than YouTube are viewable, according to the September study by Google. Twitter's ad prices have fallen as it seeks to improve return on investment for advertisers and shifts more ad inventory to video. The digital video ad is defined as viewable if a minimum of 50% of the ad is in view for at least 2 continuous seconds. It's so weird. It's amazing that they get away with so much and there's so much bread involved, but I guess that's how it works. Google's lead in AI technology may help it gain share in the cloud infrastructure as a service industry. Google's open source machine learning framework, TensorFlow, will likely act as a funnel for cloud customers as developers adopt the standard. Google's cloud platform infrastructure offering can likely boost revenue despite competition from Amazon as well as Microsoft, as increasing AI integration differences differentiates its offering. Spending by global infrastructure as a service, end users may reach $89 billion by 2021, according to Gartner. This suggests competitors can grow in tandem in the near term. AWS, which is Amazon, the world leader, topped $17 billion in 2017. Google's open source machine learning framework, TensorFlow, may be the key driver of cloud sales as adoption rises. Hardware bets may be spooks in the growth wheel. Google's hardware launches underscore its focus on artificial intelligence to be embedded in its new products. The CEO is betting on the company's leadership in natural language processing and its massive data library used in developing AI to make all of its service intelligent. Bottom line is that they get a lot of stuff happening simultaneously, folks. There's no doubt. They're trading up $10 right now. That's how this baby's shaking out. So let's go over a 10-year note. Let's go take a look at the 10-year. 10-year broke down, closed underneath the range it's been in by 4 ticks. 119.14 was the number. Now, volume dramatically different, dramatically lighter. So we'll see if it's going to hang down there or you're basically going to go topside once again. The 30-year not only held tight, it rejected lower price and had dramatically lighter volume. The 30-year traded down to 142.09, closed out at 142.30. Bottom line is that the swing low on this 30-year is 140.114. If we go to the TLT, the 20-year bond fund plus, what you have there, you're back into 9.7 million. It did 7 million. Hasn't rejected lower price yet, but guess what? It's just about there. The swing point on the TLT is down at 116.51. You're 2 points away from it. So there's divergence in that structure as to where bonds and notes are going. Stay right there, folks. Come right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow of Industrials finished down 14, Nasdaq off 17, S&P's flat. And let's go over and we take a look at some of the higher volume stocks out here today. You did have a low volume market. Well, let's take a look at those volumes. The volume on the NYSE came in at 731 million. Bottom line, we had gone down Friday on 920. And on the NASDAQ Composite, we did 1.7 billion. That had come down to 1.9 billion on Friday. Higher volume stocks out here. GE was flat, $14.52. Twitter was down 69 cents. We had the Chicago Bridge off $1.21. Facebook down 44 cents. Microsoft up 35. Intel down 43. You had Marvell up 22. Snap was up 34. Wells Fargo was up 5 cents, and the Wells Fargo, they bottom line is that they have their corporate meeting tomorrow, and the bottom line is that they made it in Des Moines, Iowa, hoping that, guess what, that a whole bunch of protesters weren't going to come to Des Moines, Iowa, and they didn't get their wish. Bottom line is that that is going to be a real trip out there tomorrow, you know, as to how many protests are going to be out there trying to get rid of the CEO as well as the board. The amazing thing about Wells Fargo, folks, is that they have so many parts of their business that have got fines for billions of dollars. It's just amazing. It's like, and guess what? Nothing's happened. And the ironic part about it, of course, is that you're still trading close to highs. You're at $52. The high was 66.31. You know, so it's like, guess what? It's the fines are part of their overhead. And for the amount of bread they're taking down, evidently it doesn't hurt them. They pulled in $22 billion in 90 days. They made they made $1.12, and that was what they were looking to make. So they made exactly what they thought they were going to make. That in spite of the amount of fines that they have. Pretty crazy, man. I mean, it's actually amazing. But bottom line, that's how these are shaking out. We were talking about the banks a little bit earlier. In the fourth hour, Goldman Sachs. Goldman Sachs, bottom line, you get yields going up and banks are going down. You know, we're 246. This has high volume swing low at 239. It's going after it. Pretty wild, man. The semis, SMHs, they are still, they're in a monster ABC down. Now this is a heads up for the market in general. The semis, bottom line, led the NASDAQ up, led the NDX up. You know, not that the NDX is falling apart in an extraordinary way right now, but this is a big heads up. Why? On Friday, we broke the B point of the SMHs, broke it with volume. It's a decent A to B. 114 is your A, 99 is your B, so you get about 15 bucks. That brings you down to 95. Right now we're at 97. Your high volume low is at 93. I expect you're going to go for it. And we bring this back a bit. You know, what you're going to see is that depending on how we hit it, we came down last week with 40 million. The high volume low is 66. That's on a weekly. We're going to go after it. The real question is it going to break it? Because if we do break it, then the semis are going to have some monster problems. Because what you do have is you take the bottom of that 93, you take the top of 114, so you got, what, 20 bucks gets you 50, gets you 73 price projection. And what you do have inside the semis is that you have a high with no volume, 24 million, after coming down with 40 million, 66 million, and we came down with 40 million last week. So that wants lower price. We take a look at a couple of them that have already broken down. You get AMAT. AMAT blew away its B point, blew it away with volume. That ABC structure down is approximately a 9-point ABC down with a price projection of 49. You're at 50 right now. That being said, it still has a high volume low at 48 to 45. So I expect what we're going to see there, it's going to go right after that number. And, you know, we'll see whether that number holds. This also had a big expansion of volume on the way down. Lam Research, LRCX. Same number. Now, oh, this is interesting. So Lam hasn't broken its B point yet. Now, this is going to be wild watching this shake out. This is why. So picture this. Your A point on Lam is 234. Your B's 189. So 45 bucks, right? Your C is 212. So we're basically saying about 170, 165. Yeah, 165. Your high volume swing low is 167. Now, watch this with Lam Research. Your swing point is $189.09, established the 6th of April, 3.1 million shares. We come down last week with 8.7. You pushed into it. And watch this. Today, you went up on 3.4, and it couldn't hold price, folks. That is building cause to go after that swing area. You'd never like to see something like this if you're a bull. Because, why? Because it came down on volume. You're going into your B point after knowing that the SMHs already did a confirmed ABC down. AMAT did a confirmed ABC down. I can bring up a couple others. So the sector itself is in trouble. Then what ends up happening, we go up today, doesn't hold price, big contraction of volume. This baby wants lower price. So that's going to be a really cool one to keep your eyes on, because when you do look at Lam, the consolidation that it's in is amazing, meaning I believe it's a 75-point consolidation. It's a monster, man. It's like, you got to be kidding me. You're trading in, let's see. So I'm not even going to take the high, spike high. I'm going to take the high that was generated in November. That's 219. Yeah, to 156. You're talking about, you know, let's see, what's that? That's 44, 54, 60, 65-point consolidation. That is a monster, folks. And, you know, if that breaks down as it goes after this high volume low, then we'll get out of the way, man, because this thing, that would be putting that into some serious business, man, like shooting it down to the 100 area, which would be a total mind blower. But guess what? That's how semis trade. Now, they haven't traded like that for a long period of time. This has been one of the biggest runs in quite some time inside the semis. You know, most times what you do inside the semis is that it's either feast or famine. You know, if we take a look at this, I just brought the SMHs back 25 years. You know, you're going to see, bottom line is that we went sideways from 2014 all the way over to 2016. You know, not much action there. But right from the January of 2016, that was a one-way trade, dramatically higher. In fact, each and every month, you had higher price, big time too. Last time up on volume was the highs out at 109, and we spiked to 114. And you know, this is going to be really wild, folks. So this will be a classic for, you know, candlestick charting also, if in fact this was the high. You get a monster doji that's laying right up there. And of course, in the candlestick charting, that is saying, watch out, you get a big high coming in. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Let's go over to Google again. Google just started their conference call, folks. So Google's trading, come up with the numbers, 1067, traded as high as 1100, 1074 right now. We were talking about those capital expenditures. Well, they're saying one of the, they spent $7.5 billion in capital expenditures. 2.4 of that was the purchase of their Chelsea market office in New York. They hired 5,000 employees in the quarter. They have a total now of 85,000. Now, you check about, it always blows my mind about how these companies can grow so exponentially and how do they keep track of it. That, folks, is 50 new hires a day in the 90-day quarter. How's that? Is that amazing or what? They're also disclosing that there's a new accounting standard that changes the way companies have to report equity security investments. It means that all their gains and losses, unrealized and realized of equity in private equity, must be recognized on their income statement. That would include Alphabet stakes in Uber. The gain on the securities thus this quarter was $3.03 billion. And that number from the 2.4 billion did come right from the CFO. Operating costs increased far more quickly than revenue. Their margin came down to 22.5%. This was the company's lowest margin since 2012. The company is discussing right now annual stock grants to executives and other employees in the first quarter, and it's not clear yet how much that actually dragged into their operating profit. I'm sure they're going to ask them questions about that, because if you saw the Journal this morning, it had the aspect of their CEO will get tomorrow, when he first got hired, there's a lot of stock grants that get exercised, and bottom line is that the first payday is something like $350 million, big number. They're saying that they're going to spend big marketing on the cloud, hardware, and Google Assistant this quarter. They're going to blanket the, they did blanket the CES show in January. They're advertising the Google Assistant across the web, where they're hoping that none of us can escape it. Digital advertising business generated robust growth in the first quarter. This is the CEO talking right now. While spending surged, says the company has not shrugged off the privacy backlash against internet companies and their heavy data ad targeting businesses. Well, we'll get back to Google as that goes along, but it's certainly big numbers, but hasn't done much to the stock. Right now, the stock is out there at 1,075. We go take a look at. Let's go back to GE. So you know, it's really wild too, folks. Is that this is what's going to be really wild? Watching how GE shakes out versus how the context of Sears has basically shaken out over the course of the last 13 years. If we take a look at GE, what you are seeing is, you know, bottom line is that you have a company that had many assets, and bottom line, they keep selling them off. In fact, when they came out with their numbers last week, if you saw inside of that press release, there was, now, when they wrote off with one of the write-offs was Genworth. Genworth, that was GE's long-term healthcare company, insurance company. They sold that off. When they sold that off, guess what? They sold that off with the aspect that they were responsible for losses that came into the company. So they've been playing games for a long period of time, meaning they, you know, normally when you sell something off, you're not selling something off to turn around and take losses for the worst part of the company. The reason you're selling the company is that, you know, the company, in their case, you know, had problems. Well, bottom line is that that's what they did. That being said, what also you had in GE when they came out with their numbers last week, and that's when you had the pop on Friday. You know, you closed at $13.99 Thursday. Friday you get to $15. Today we're at $14.52. What you also had in there was an additional write-off for subprime loans of $1.5 billion. And, you know, I brought this up in the past for a long period of time. What's going on with GE, and that's what I think underneath is what's going to do them under, period, is in 2004, 5, and 6, what had happened is that the market had been, and, you know, I've seen this happen so many times in the last 35, my God, it's like 45 years now. And what it is this. The first time it happened, I didn't quite, you know, it got to happen a few times, because what seems to happen, and I'm just talking about, not talking about the stock market, I'm talking about any type of financial business in general. And what it was is that the first savings and loans, when the first savings and loans, folks, went bust, I believe that was in like 1985, maybe? Maybe it's 85, I'll be 35, maybe 82, 83. I'll get that number. But this is what the point of the story is. What was happening then, maybe it was 87, what was happening is that you could go to any savings and loans and get as much money as you wanted. And it didn't matter, you know, what was put on your loan application, and that was like a normal occurrence. And I always thought, well, this is really weird, you know, because I was lucky. I was dealing with the bank in Boston. It was South Boston Savings Bank first, and it was the First National Bank. Well, bottom line is that, you know, you grow up with them, you always had to put 20% down in all of this, and that's just how it went. So that's what I was used to. But I remember specifically that I was always wondering, well, how are these people buying all this stuff? Well, that's how it was getting done. But there were so many people doing it, it almost like it wasn't illegal, okay? Bottom line, of course it was illegal, but there were so many people doing it. What ends up happening, all the savings and loans get wiped out. I remember specifically going into the Dime Savings Bank when this was happening in Nashville, New Hampshire, and they were willing to give me a building for $1 million and put nothing down. And they just wanted to offload it. And I should have took it, but I did. Because the bottom line, it ended up being worth, I says, no, man, let me out of here, because, you know, it just didn't seem too good to be true. Well, bottom line is that was the first big crash I ever saw, and yeah, they were unloading. Okay, so then now I'm gonna fast forward. You can just even fast forward up to the last. Well, we can go to the internet. No, let's go to the internet. What happened with the internet, right? When the internet crashed in 1999, 2000, what the key there was, right? And these are all frauds, by the way. But my point is that when so many people do them, you think that they're legal. They're not. So the deal was then is that you have 5 companies. And what was happening is that one company was selling to the other company eyeballs, and the other company was selling to the other company eyeballs, selling to the other company eyeballs. They were all the exact same eyeballs. And it was all a fraud. They all go downtown, right? My point is, in 2007, guess what? GE was signing balance sheets, okay, renting their credit for like cheap money. Well, guess what? They're on the hook for it now. That's what's going to put them out of business. Stay right there, folks. Come right back.
Larry Pesavento will be hosting a 90-minute webinar this coming Tuesday, April 24th for all Fibonacci 24/7 subscribers. Larry has teamed up with fellow trader Jim Bartoloni for this informative 90-minute workshop, taking the ABCD pattern to the next level. Throughout this 90-minute live webinar, some of the topics Larry and Bart will be discussing include the origin of the 1.618, the golden mean, the relationship between numbers and cycles, time and price, the simple math behind market moves, and much, much more. This workshop will be archived if you can't attend live, and all new subscribers get a 30-day money-back guarantee when signing up for Fibonacci 24/7, so you have nothing to risk. For all the details and to sign up for Fibonacci 24/7 today while gaining access to Larry and Bart's webinar Taking the ABCD Pattern to the Next Level, visit the front page of TFNN.com now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, as you come over to our website at TFNN, I'm Mr. Larry Pesavento. Now, Larry kicks us off every trading day, 9 to 10 Eastern Standard Time. Larry's going to be doing a workshop tomorrow night for all his subscribers. You can be a subscriber right here, right now. His newsletter, 24, Fibonacci 24/7, comes with a 30-day money-back guarantee. Larry is teaming up with Jim Bartoloni, but Jim is one of the traders that Larry basically mentored a long time ago. They are going to be talking about taking the ABC patent to the next level. This workshop is going to be tomorrow night, 6 to 7:30 p.m. What they're going to be talking about? They're going to be talking about the law of vibration, why numbers matter and how they are related. The simple math behind all market moves, how to use sacred geometry, the squaring of circles and what it actually means, the origin of the 1.618 golden mean, and bottom line, the music of the dial, music of the octaves. That sounds, bottom line, like it's pretty far out, folks. You're going to be really surprised. Number one, how the 0.382, 618, 786, 50 in correlation of the 1.382, 1.618 relate to each other. It's pretty amazing. And it's throughout the world, throughout our lives, all of the above. It's pretty cool. When you wrap this all together, what you're going to get is you're going to get an amazing workshop on the aspect of the theory of how pattern recognition works. And then, of course, what it comes down to is you get the pattern recognition, you get the money management, bottom line, you're in the probability business. Don't miss the workshop. It's going to be a fabulous workshop. Bart himself has quite a resume. Spent 11 years in the Navy as a fighter pilot, and bottom line, he graduated from Top Gun school. So you got someone very qualified is going to be growling a problem with you out here tomorrow night, 6 to 7:30. Check it out on the front page of TFNN. Have a great one, folks. Have a safe one. Look forward to speaking right back here tomorrow morning, 8 o'clock. Wow! Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.